Hi, everyone. I'm Ivan Bayuki, and welcome back to Wall Street Silver. Our guest today is the one and only commodities investing guru and the founder of Rule Investment Media, Rick Rule. It's great to see you, Rick.
Thank you for having me back. I enjoy these sessions.
So, Rick, let's dive right in. Everyone hates silver and gold right now. Everyone hates it. Or at least we love it. We love it here on Wall Street Silver, but the general market hates it. So, you have a reputation of buying it when the blood's in the street, buying them when everyone else hates them. So, what are you doing right now with your silver and gold portfolio?
Well, as you might suspect, these are pleasant times for me.
Mm-hmm.
I've been on Earth long enough that I don't require a lot of company in a trade. I don't require being popular. In fact, I prefer to be unpopular.
Mm-hmm.
When I look at the comments around my social media appearances, people have been saying for the last 3 months he's never been right. These are people whose time frame is 5 months. And my time frame is more like 5 years. So the idea that my best ideas are reviled is actually very useful to me.
Mm-hmm.
Warren Buffett, not a bad investor, has said that you make money by being brave when others are afraid, and afraid when others are brave. Or conversely, you make money buying straw hats in winter. So the circumstance around my attraction to precious metals, we've gone over before. Gold, as an example, or the precious metal space, tends to do well when people are concerned about the maintenance of the purchasing power of their savings in conventional instruments. Nothing like negative real interest rates to make somebody feel concerned. But this change in attitude takes time.
Mm-hmm.
And most speculators in particular aren't willing to assign the time that they need for their investments to mature. Silver traditionally has acted like gold on steroids. It moves in the later part of a precious metals bull market. When you're in a precious metals malaise, it declines faster than the gold price does. But when precious metals prices turn around, they perform better. Perhaps because I've right-sized my investments, which is to say I don't have my whole net worth in penny silver stocks. The fact that they're declining in value while the malaise period is running past us is very attractive to me. What's more attractive to me right now is across the whole real micro cap space, the sub $100 million market cap space, there's no liquidity in the sector. Companies that played chicken with capital markets, didn't raise money when they could, are now having to raise money. And they're having to raise money in a circumstance where money isn't broadly available, which means that the terms that I'm being offered, not just in the silver space, but really across the micro cap space, are the best that I've seen in 5 years. Will I be able to sell those tomorrow? Will I be able to blow out my position by the next long weekend? Do I care? No, not at all.
When we first started talking to you a year ago, when we started Wall Street Silver, let's call it early March, April 2021, uranium was hated at the time.
Right.
It was hated. And I went back and looked at our early videos with you when we first interviewed you, and you were talking up uranium before uranium got hot. And you were talking about, you were reviewing every single uranium exploration and junior producing company out there, and you were buying them hand over fist. You bought them when everyone hated them.
Mm-hmm.
And now uranium's trendy. Everyone's talking about it. Japan's starting up all their nuclear power plants again, taking supply off the table. Sprott Uranium Trust is buying, millions of pounds of uranium and taking it off the market. So I sort of bring up the uranium history of you were doing that, buying them when everyone hated them.
Right.
And now uranium's, at double the price, and it's still going, and you're not selling uranium yet, or your uranium stocks. So should silver and gold investors be taking that longer term view? I guess that's the analogy I'm trying to make.
I think that the broad part of the analogy is accurate, which is to say you buy a sector, if you like the sector, when it's out of favor.
Right.
You don't wait for the psychological reinforcement of rising prices, because the rising prices reduces your yield. Listen, if nothing has changed around a company, but the price has doubled, it's arithmetically half as attractive. If nothing has changed around a company and the company falls by half, it's arithmetically twice as attractive. But most people don't make the connection between price and value. Most people pay real attention to the price with having no knowledge of value.
No.
The price is a floating abstraction if you don't have any sense of what the value is. And most people would rather be comfortable than become rich. I'm already comfortable.
You're already rich.
I don't speculate. I don't speculate to be comfortable.
Yeah.
You know, I go out and, you know, sit on my deck in the sunshine and drink a beer with my wife to be comfortable. I speculate for very different reasons. So I need to say, twice before in my life, no, 3 times before in my life, I've been a tremendous beneficiary of the run-up in fairly obscure silver stocks. It's happened to me 3 times now. At age 69, I'd like it to happen one more time. Will it happen? I honestly don't know, but I think it's a probability, not a possibility. And I get admission to this potential party, whenever it might occur, at prices that are lower in the silver space than I would have dreamed of enjoying a scant 3 years ago. So, you know, for me, this is just sort of a dream come true. This is the opportunity to have a sort of a swan song after a very lovely career to an absolutely spectacular party. Or let's put differently, as a younger person, this is the ability to go into a really target-rich nightclub for no cover charge.
That's nice.
How can you resist this?
You're seeing a lot of attractive girls in the nightclub still.
Well, I'm not allowed to say that anymore. You know, ESG gets in the way. Let's just say targets.
Targets of opportunity. Yeah, they're out there. You just gotta, you know, be patient and hunt for them. And you were telling me, if you're looking at private placements, and that's what's worth investing in right now, if you're in this sector, you're looking for warrants on a private placement that go out more, you know, if a half warrant or a full warrant that goes out 2 or 3 or even 5 years. That's what you're looking for. That's where the terms where you think it starts looking attractive.
Yeah, absolutely. I mean, you really shouldn't do a private placement if you don't get a warrant. You get restricted securities, and you're providing capital and liquidity to people who have free trading securities. So in a sense, without a warrant, you're subsidizing the existing shareholder. And they probably are not sending you a Christmas card or a birthday card for that. The reason why you contribute to a company with a restricted security is that you should get the ability to get some extra juice out of your investment. And that juice comes in the form of a warrant. Now, many companies, many issuers will tell you that a warrant is dilution. But for some reason, their directors' options aren't. The difference between a warrant and an option is merely who gets it. When I have these discussions with company managements, they often say, well, warrants aren't the same as options. I work at the company 5 days a week. And I say, thank you for pointing that out. My money works at the company 7 days a week. So theoretically, I should get 7/12 of the benefit if you add 7 and 5. So I like, when I do private placements, to have a warrant package that looks very much like the option package, that has the same duration, most often 5 years, that has the same strike price and terms. And I like to get a pledge from the company that they won't reduce the exercise price of their stock options if they don't reduce the exercise price of my warrants. In other words, I want to be treated pari passu with managers.
So, Rick, one of the things that has a big impact on, you know, silver and gold prices, and that's why we talk about it so much here on Wall Street Silver, is what central banks are doing. and how that affects the dollar versus the euro, or the dollar versus the yen. So what's recently happened a few days ago is the European Central Bank, in order to fight inflation, they raised interest rates from 0% by 0.75% to 75 basis points. So the European Central Bank, they seem to be getting tough on inflation, or talking hawkish, if you want to call this tough. They're not even at 1% to fight, whatever the number is of inflation out in Europe. How are you watching this in the current environment? How does this change your thinking, and how does this change your investment strategy?
In the near term, Jim, it's all about interest rates.
Mm-hmm.
And I think there's two things here that we need to discuss, maybe three. The first is that rising interest rates, particularly in the US, rising nominal interest rates, strengthen the US dollar, and in the near term, weaken gold and silver.
Mm-hmm.
And my suspicion, before I talk about Europe, would seem to be that Mr. Powell in the United States believes that there's room in the economy to continue to let the interest rates rise. And to the extent that he is able to do this, we will continue, I believe, to have soft markets in physical gold and physical silver, and as a consequence, soft markets in gold and silver equities. The suggestion that Mr. Powell and that the Europeans are really engaged in fighting inflation is a topic worthy of discussion. What I think they're doing is that they're raising interest rates, or allowing interest rates to rise enough that they have ammunition to cut them again,
right,
if they need it. If they were really interested in fighting inflation, they would get out of the way. Traditionally, interest rates, you haven't had to talk about nominal interest rates. You've talked about real interest rates. And if the rate of inflation in the euro area is 8% and the rate of inflation in the United States is 9%, traditionally, real interest rates on real savings products like the US 10-year Treasury have traded in front of the rate of inflation. So if Mr. Powell was serious about fighting inflation, the US 10-year Treasury would have a 10 handle on it. The US 30-year fixed mortgage rate would have an 11 handle on it. If they were really serious about fighting inflation, you would have a real yield for savers.
Mm-hmm.
They aren't serious about fighting inflation. They're serious about fighting the specter of inflation, and much more serious about raising nominal interest rates to the extent that they can cut them again should they need to. It's important to recognize that. Gold and silver speculators need to know that if the increase in nominal interest rates wreaks the same havoc on the economy, in conjunction, as an example, with a war and inflation, as it has in the past, if Mr. Powell halts the increase in interest rates or lowers the interest rates, and I'm not saying he's going to, and I'm not saying when, but if he does, what you will see is a repeat of 1975, where the game in gold and silver equities is on in earnest. Remember, that's an if. Well, I believe it's a when, actually, but I'm jaundiced by my view of history. If that happens, I think subscribership to your channel goes ballistic.
I think so. I'm hoping we're going to go from 50,000 up to 500,000 subscribers, probably, when people start getting the fear of missing out on silver and gold.
Oh yeah.
But that raises the point of, right now, all the political pressure is on the European Central Bank and the Fed, Jerome Powell and Madame Lagarde, to fight inflation. So does something need to break in the system before the pressure on them changes to, oh, we got to ignore inflation, now we got to save the economy? Are we waiting for something to break?
I don't know, to be honest with you. I believe that the economic system in the West has been built for 40 years on liquidity and lower interest rates. I believe the subtext has been that in a democracy, your political reward comes from subsidizing spenders at the expense of savers. That's what negative real interest rates are. There are more spenders than savers. So in a democracy, a time-proven tool for politicians has been to punish savers and reward spenders. At some point in time, that doesn't continue. At some point in time, the savers go on strike. And I suspect one of the subtexts of rising nominal interest rates has been that both the European Central Bank and the US Fed fears beyond anything else a treasury auction where nobody shows up, where they have to purchase the whole issue. If you had a broken treasury auction, I think you wouldn't need to wait for declining interest rates. I think the specter then around the game being over or close to over would be present. I'm not saying, by the way, that we're on the edge of that precipice. What I am trying to say is that the action that you would see in precious metals and precious metal stocks, were you to see either a failed treasury auction or the Fed reversing the direction of nominal interest rates,
right,
would, if past as prologue, have such a dramatic impact on saver confidence, precious metals prices, and precious metals equities prices, that almost no matter how long you had to wait for it to occur, it would be worth your while to participate in the wait. That isn't what your audience wants to hear. You know, your audience wants to hear that, you know, Powell is going to blink, and he's going to blink next Friday or something like that, and that the gold price is going to go to 2,500, and the silver price is going to go to something crazy, and Consolidated Orangutan Mines is going to go up 1,000%. But we're not in the entertainment business like that. We just have to tell it like it is. There are probabilities, there are possibilities. That's what speculation is all about.
You know, Rick, you were the CEO of Sprott USA for many years, and you just recently retired last year from that job. And at this point in your life, you know, I thought you were going to go off and start traveling with your wife and enjoying life a lot more. But what are you doing? You're starting a new bank. What's up with that? Why are you starting and why would you start a bank of all things for a new company?
This will be my 7th bank, to be honest with you. I've done it for a long time. I didn't anticipate starting one at age 69, but a couple things happened. The first is that my relationship with my own banks has deteriorated to the degree that although I'm a big customer, my relationship with them would best be described as sullen rather than mutinous. Moving my account from California to Washington with a bank that I've been a customer of since 1968, among other things, they lost my trust document and made it up to me to furnish it to them. And I see things as a bank investor that have really troubled me. One would be the incredible level of derivative exposure that I see on major bank balance sheets. These guys are smarter than me, but they're not smart enough to have $50 trillion derivative books. They're not that smart. And major sectors of the banking market are underserved. In 1998, I participated in the startup of Everbank, one of the first online banks in the country. And we had a very simple deposit product. Because we didn't have any branches, we had very low non-interest expense. And because of that, we could pay our depositors in the top decile of deposit interest rates in the country while still making comfortable returns. We, as a consequence of focusing on customer service and reducing non-interest expense, we were able to grow that bank from zero to $28 billion.
Wow.
In net asset value before we sold the bank to TIAA-CREF for $2.8 billion. So in the one hand, we were able to benefit literally hundreds of thousands of customers, while at the same time, early investors over 14 years enjoyed a 30x return on capital employed. Although I don't need to make more money, Jim, I love to make more money. And I love to make money in ways that serve the constituencies who I have tried to serve for the last 50 years well. Do you realize that there is no U.S. chartered bank that I know of that has a program to lend against physical precious metals in segregated facilities?
Mm-hmm.
Well, this isn't an opportunity that's big enough perhaps to attract Wells Fargo or Bank of America. It is very attractive to Rick Rule, who believes in gold and silver and knows tens of thousands of gold and silver investors. Yeah. It's opportunities like that that scream at me, that say, Rick, you have to go back to work. This is going to be fun.
Yeah.
That's why I'm doing it, Jim. I can't help myself.
You've got to find someone to run the company now for you, right?
We've got Frank Trotter, the same guy who did Everbank, the guy that we built from zero to $28 billion, the same chief operating officer, the same chief technology officer, the same senior credit officer.
Everbank, huh?
Yeah, all these guys did it before.
Yeah.
Nice.
So I guess their non-compete clauses from that sale have expired and they're ready to go again, huh?
That is correct.
Yeah. So, just to wrap this up, I know you give people an opportunity to send their portfolios to you. Tell us about that, and we appreciate it.
I appreciate it. Thank you so much for that. I learn a lot from ranking people's portfolios. The offer goes like this. If you care about my thoughts on natural resource investing, particularly your own investments, go to my website, ruleinvestmentmedia.com. List your natural resource stocks. Please no pot stocks. Please no tech stocks. Please no crypto. I'll rank them 1 to 10, 1 being best, 10 being worst. I'll comment on individual issues where my comments might have value. In addition, in the question and comment section on that database, if you care about my bank, just write bank. I'll put you on the bank list. And finally, if you're an accredited investor, if you like participating in private placement investments, and you want to know for free what private placement investments I'm participating in, write down placements. I didn't used to be able to do that when I was licensed because they called it a solicitation. But since I don't get paid, it's not a solicitation. If you're accredited and you want to know about my placements, write in placements. So rankings, bank, placements.
Thanks for the update, Rick. We'll talk to you again in probably a month or two.
Thank you, gentlemen. I look forward to it.